well, I want to carry on the trading, but it's like,
You don't want me to sponsor you a new little account?
well, to be honest, you probably be better off doing that, but do it through both. Like, if I had him with me as well, it's like when I trade me in, I'm fucking sound. When you're on your own, it's the revenge. It's like that
No, no,
revenge
I know,
shit.
mate. I know it's
And
tasty.
I don't want to do that. I want to do it properly. That's why this setup, doing this and doing what we're doing, I think that'll be the fucking way.
Yeah.
Way to
Thing with
do
you,
it.
you need something to do as well as trading. Whereas I know that I do until 4 and I'm done. Like yesterday, I
That's
took a
what
small
I'm.
loss, so
That's what
I
I'm.
made a
Following
win,
your rules.
made a loss, but my win outweighed my loss. And if I was trading all day,
What's going on, guys? What's going on, guys? Any of you took trades so far? You holding down? All right. Yeah, good job, good job. Yeah, good shit. All right, so let's just get into this event. So for you guys that know, we have NFP data today. So this print, I feel like is going to be, it's going to be more important than the previous ones, right? Because we've been seeing a trend of data lately that has been suggesting that the Fed should initiate that cut, especially when it comes to labor, right? So with this, if we get a negative print, the odds of this month when it comes to the rate decision could actually increase to 50-50 between a cut and a pause. So depending on what happens with today's data, especially if we get a miss, I'm hoping for a miss. I think that would be the best tradable opportunity. Then I could see Fed speakers' comments being extremely important afterwards, giving their expectations on what's next. Because lately, when Fed speakers talk, let me record it. Sorry, guys.
Recording in progress.
Because lately, when the Fed speakers has been talking, markets is not really reacting to any Fed comments, right? Until recently, where we had the two Fed speakers that actually came out and actually initiated to the markets that they was going to cut rates. So that's what's really important, right? So now with this print, if we do get a cut, on top of having multiple Fed speakers confirming a cut afterwards, that could lead to really good tradable opportunities. Okay, if we get a miss enough where it could force that edge, I think that's going to be that's going to lead towards a game changer. If we get a strong print, right, don't really expect much to happen, but it's just going to allow the Feds to stay restrictive, right? There's not going to be any rush for them to actually cut rates. All right. So that's why I feel like today's print is going to be important, right? Depending on the number, obviously. And we're going to get through that right now. All right. So we have earnings, which is inflationary. We have initial jobless claims because it's all today, but it's not going to be important even with PMI. What we're going to focus on is NFP. And that's because we know that tomorrow is a holiday. And today, too, is supposed to be a partial day closure. I think after 12 or something, or maybe at 4 p.m., the markets is going to close. I'm not sure if it's 12 or 4 p.m. So we have a partial closure today, too. So, and then also we got the bill. The bill is supposed to be passed today. So we also have that as well. Okay. So a lot of things going on. But in order for us to take advantage, right, if we want to take advantage of a miss, I feel like a miss to me is going to be the best option. All right. We're going to be looking at this NFP number. As you guys can see, like these are just the expectations of institutions, right? So we have to look for an outlier. What number is going to be what number is it that's going to give us the best edge? Okay. Because it's not just focusing on one print NFP. We need all the metrics, all the data, annual earnings. We need to see, NFP, annual earnings, and unemployment be in the same direction in order for us to take advantage of a good trade. So just the outlier, right? A surprise. If we get a miss, we want that number to be below 50,000, right? If we get that number below 50,000, just like what happened with ADP, you just saw how the dollar just melted, right? I expect something similar like that when it comes to the dollar. All right. If we get a beat, it'll be great to have it above us 160K. Probably very unlikely. We never know. But I think that would be the ideal, for a massive print. So if we get anything below 50 and we look at earnings, right? We want to see earnings below 3.7. If we get at a 3.6, and this is year to year. If we get monthly to stay below a 0.2, this is going to give us weaker yields and weaker dollar, right? That's going to increase the odds of a cut. That to me would be the best tradable opportunity. All right, guys, if we get a miss across the board. Now, if we want to beat with the dollar, right? We just look at the outlier. If we could see anything above, right? NFP, if we get anything above, I would say if we could hit like 150K, I think that's no brainer. That's going to be dollar buys, right? Along with earnings actually higher than a 3.9. That's year to year. And then monthly, if we could get it above a 3%, a 0.3, if we could get it at like a 0.4, that will signal dollar buys. All right. So very, very simple. Okay. If we get stronger print across the board, and unemployment, usually unemployment stays the same. But if we get unemployment to go around a 4.4 or even 4.5, that would be extremely negative. So we're going to want to see a higher unemployment, showing more people losing their jobs, along with negative data. That will definitely give us those dollar sells. All right. And then now, if we see that unemployment goes to like 4.1%, that would be crazy. But a lower unemployment shows that more people are still working, which is actually positive. Okay. So just to give you guys a breakdown. Now, that's for the dollar. So it should be very simple. If we get a stronger print, right? If the data shows strong unemployment, that's going to trigger for the Feds to stay restrictive. Most likely we'll see a stronger dollar out of that. If we see a negative print, that will most likely increase the odds of a cut, more cuts happening this year. That will weaken the dollar. All right. Now, when it comes to equities is going to be tricky, right? Because typically with this type of data, when we expect the equity markets to follow the data, right? So typically when we get a weaker print, normally we will get weaker equities as it's showing weaker growth. But the fact that now today's print is going to have more impact on monetary policy, it is a possibility that equities will be opposite of the data because, right, if we get a weak enough print, that will increase the odds of a cut, which is supportive for the stock market. Make sense? So this is why it's going to be important to pay attention to this. It's going to be important to pay attention to the type of number that we get. If we get, especially like NFP, right? If we get like NFP and that number is below 50,000, that to me would signal a recessionary reaction where we're probably going to see, if we get like NFP at like 10K or some shit, right? That's going to signal a recessionary reaction. I will see equities melting across the board from that print. But then still, it is a possibility for equities to recover and push higher that would definitely signal a Fed cut. Okay. So you just have to be cautious when it comes to equities for this print. The same thing, because as expected, right? Just give you guys this so you can see it clearly. So NFP, where's non-farm payroll? So you can see the expectation is 110. If we get 100K, that's negative. It is negative, but that's still strong. That still shows a strong economy. So I can see equity still pushing lower as as NFP is showing negative data, but it could still cause equities to push higher after that, knowing that this is not really that bad. All right. So if we get a complete miss, I think the sells would probably be the best option, right? Increasing those, showing that recessionary fears is coming, but then always just try to keep in the back of your mind that we could get a reversal from that because this is increasing the odds of a rate cut. Okay. So equities is going to be tricky when it comes to that. So that's what we're going to pay attention to and just remember those numbers. And then, like I said, yeah, thanks, Wayne. So 1 p.m. markets is going to close. So end of the session today going to be very, very quick, very quick week. All right. And then remember, we got the bill being passed also. So that could all, depending whatever happens, that could impact the market afterwards. Hopefully we won't get no news headlines on wars or anything like that. We could just focus on this print. What we're going to stay away from. Okay. If the numbers are just mixed, if we see earnings is red and green, we see that NFP numbers is the same. Unemployment is opposite. If we see a mixed print, it's not tradable. All right. So don't even try to wrap your head around it and trying to figure it out. If it comes out mixed, stay away. If there's no clear edge, stay away, right? Only take advantage of if we see data supporting weak growth or if data supporting strong growth. That is the only thing that we pay attention to. If it comes out mixed, just completely stay away. All right, guys? Just put a 1 if it makes sense. If you have questions, ask now. Gold, yeah, I'll get the gold. Gold will just do the opposite of the dollar and the yields. That's all. But it just depends on the print. That's really what matters. But it's going to do the opposite of dollar and yields. Yeah. So like to answer that question, yeah. So if usually you want to catch a surprise, right? So if the markets is really showing us that they're really expecting a negative print, right? They're expecting a big miss, right? If we get a strong print, that's going to surprise the markets. That to me, like a surprise strong print, to me would be very better for dollar buys. But for equities, I don't really expect much out of it, right? Because it still shows strong growth, even though that the markets will anticipate a pause when it comes to rates. But I don't really see a reason for equities that end in the red for today. I think equities will still push higher for the day. It just probably won't give you a really clean tradable opportunity. Just try to catch buys from the lows. But dollar would probably be the best option if we get even if we get a miss or a beat, dollar would be the best option. But if you want a really good print for the dollar, I think a strong reaction in NFP today would definitely help dollar buys. That would probably be the best bet because that would surprise the markets. Because yeah, they're all probably expecting a huge miss today. So if that shit shocks the hell out of them, that would be a really good reaction as dollar strength. But equities, like I don't really feel that the moment those sells make sense, right? Nothing is really contributing to sells. Only if we have higher inflation, if we just continuously have strong dollar, like strong data, then it's like, okay, we can start looking for equity sells as the Feds is definitely not looking to cut rates. They're definitely not looking to. But still, we have a strong economy. So that supports growth. No real reason to sell that. All right. So now I'm going to just go over the trade reactions, guys. All right, everybody, you good? So put a 1 if you're good. If you have a question, ask now. Don't ask when we're waiting for the print to come out. And if you're new to trading this, like just don't rush yourself. It's okay to be patient. Like we get these prints every month. So it's good to just like experience it, definitely experience the print, but you don't have to rush yourself to trade this print if you're new to it. All right. Yeah, because it could be very volatile. So you don't have to, you don't want to put yourself in a position where you're over leveraging and you don't know what the fuck's going on. It's just best to just like educate yourself first. Just see how the reactions are, definitely taking a print that gives us a clear edge, not just looking at only looking at NFP and then think that, this is okay, I should take a trade. We have to look at all the metrics. Everything has to give us a clear edge. Like we have to look at the print and say, okay, this is negative for the dollar. This is positive for the dollar. Oh, this is good for equities. This is bad for equities, right? Because one of the best things to do is like when you look at a data print, if you was a Fed member, right, and you understand how they make their decisions, like you understand it. So if you see this data, would it make you would it give you a hawkish bias or a dovish bias? Do you think that they should cut rates from this print or you think that they should pause, right? Like, so that's how it could help you make better decisions. If you can't make that decision, then don't take the trade. Like, oh, I'm looking at this print. This to me supports a strong economy, or this supports a weak economy. So if you could look at it and make those decisions, then that's how you make a trade. But if you look at the print and you don't know what the hell is going on, then that should show you that you shouldn't be taking a trade. All right. So remember, if we get green right now in the economic calendar, we see a strong reaction, right? Strong data across the board. We're going to see a stronger dollar. With that stronger dollar, we're going to see gold breaking below support of 33.42, right? Because that stronger dollar should come in place, pushing gold lower. Like, obviously, in these type of prints, gold has been more about price action this week, and it's been more about news headlines. But sometimes, right, don't marry it, but understand that gold does the opposite of the dollar in the yields. All right. So if you're looking to buy gold, it will be better to see if we get weaker dollar, weaker yields. Like, just it helps you with the bias. But with strong dollar, we're going to see GU break support and push lower. And Euro USD is just inverse of DXY. So we're going to see these pairs push lower, all because of a stronger dollar once it breaks structure. USD JPY should hold above 143.900, pushing higher if we get a strong print. When it comes to equities, right? If we get a strong enough print, I would like to see equities. I could see equities pushing lower, right? I could see, like, initially the safer buys is going to be above structure, right? If we get a strong print, even though a strong print will signal that the Feds don't have to rush into cutting rates, right? So knowing that for equities, if we get a strong print, the initial reaction could spike equities lower from that. Or we could see the initial reaction could spike equities higher because it's a stronger print. And then we could see equities recover as the anticipation of the Feds don't have to cut rates right away. That could cause a mixed reaction. I would say the best thing to take advantage of is if we get a higher print, is to see like equities spike lower a bit. And then once we start breaking above structure, you take advantage of the buys once we hold above 22,700. Okay. If we get a stronger print, same thing for US 30. If we start breaking above resistance, S&P is kind of the same price action as NASDAQ, right? So you just have to just mark off the zones. But just remember, right, a stronger print, like it's going to be a little more mixed when it comes to equities because we have monetary policy and then we have growth data all going against each other. So the monetary policy reaction, if we have a strong print, that's going to cause equities to push lower, right? It should, but strong growth supports the stock market, just to give you guys an idea. All right. So now if we get a weaker print, we're going to see dollar breaking below support. If that happens, we're going to see sells on USD JPY breaking below 143.650. We're going to see GU breaking above resistance above 1.3680. And then we're going to see Euro USD breaking above resistance. And the same thing for AUD USD, right? Because that weaker dollar. Now for equities, we get a weaker print. Like I said, remember, that could cause, depending on how negative it is, we could see equities breaking support, pushing lower. If we have a big miss, most likely equity sales will be the best option. But just try to remember the fact that if we get a miss also, it could lead to equities kind of recovering and not ending in the day in a red. We could see it recovering a bit. It could be a mixed reaction, right? But most likely if we get a miss, if it's big enough, expect that miss to kind of hurt equities, okay? But then also anticipate the fact that the Feds may start leaning towards cutting rates. It could end 50-50 for this month between a cut and a pause, right? And that alone would be supportive for equities. So it really will depend on the number. If we get a miss, that would weaken the dollar and weaken the yields, and that could help gold spike higher. All right, guys? All right, so... All right, YouTube, hopefully that was helpful. If you guys want to join, the live call is in 10 minutes. You could press the link if you want to join the private group. But hopefully this was helpful, guys. Take advantage and trade smart. Just remember, when the data comes out, you just want it to be a clear edge, okay? Above the high or lower than the lows. And that's the opportunities you take advantage of. All right, guys, have a good one.